Hello everyone, this is Team Trader Oxygen here. Welcome to another post-market analysis for the Friday 27th of September 2024 for the micro E-mini NASDAQ Index Futures. So let's look into this. So we recommend you having a look at this live trading session for the 27th September just before looking at the post analysis, because you can see how the live trades were analyzed, and then if you look at this post market analysis, it will make more sense to you. So just pause this video and go and have a look at this first and come back to this video. So looking at the economic calendar, we had some high impact news and some low and medium impact, so that and this day and the previous day, so we can expect some sort of market volatility. That's what we look for us to day trade. Okay, so keeping that in mind, let's look at how the day went. Daily, this we had to look at this green candle because this is the post market analysis. It's black, meaning bearish at the moment. So from green it has become bearish, but then during the day we were looking at the green like this apart, and we were having a slightly bullish bias. However, because it has reached, one second, it's bullish because one could expect the price to come and go and clear in this buy side liquidity. But having said that, we explained in the previous video, the live analysis, that why the price could come down. Okay, with that understanding where the price could also come slightly down, when we look at the market, so if we go into the 1 hour chart, you could see a couple of things. We discussed that the price pushed down very strongly, and then we discussed that the retracement happened here, over here, and we discussed that. When I say we discussed, I'm referring to the previous video what I asked you to have a look. We discussed that the price swept this liquidity over here. So with all that we explained in the previous video, in the live analysis, we explained that what happened here is that the price came from here. The reason why the price came down here, and in the live analysis we discussed a trade the team trade Oxygen placed over here. So have a look at that as well in the live analysis. And one other reason for that was the fib retracement in the 1 hour. So that actually we had to go to the 15 minutes for that. That over here, which is the 15-minute to discuss with. So the price came to the equilibrium above 50% in the fib retracement. So with all that, we took a trade in the New York AM session, a short entry where the price, expecting the price to go down. So have a look at that video to get an idea of how we took that trade. Okay, with that understanding, let's look what happened next. And then when we took that trade, then the price came all the way down and swept the liquidity here, and that trade played off well. And then after that, in the New York PM session, you can see from here to here, like around here, in the New York PM session, you can see one could take the team over here. Some of our members took another trade here. That is what we are going to explain. A quick trade from here to basically from here to here. But that happened in the New York PM session. So let's go to the 15-minute chart and have a look at that. Okay, so the 15-minute chart, let's take that, which is here. Okay, so this is that price move which happened in the New York AM session from here to here. And then this yellow color box, what you see here is the New York lunch. So from 12 to 1. So we don't trade in the New York lunch hour, right? So for you to understand why we don't trade in the New York lunch hour and some of the terms we talk, but please subscribe to the channel and click the bell icon, because we are going to release more educational videos explaining those facts. And once again, this is not investment advice. This is for education purposes only. This is not licensed trade advice. This is for the compliance reasons, government compliance reasons. We have to clearly inform this to our viewers. Now, so we don't trade, but what we do is, when it comes to this purple color area, which is the New York PM session starting from 1 p.m. onwards, when we come to that, what we do is we analyze what happened, let's say, in the AM session, and we look at what happened in the lunch session, and then based on that, we take that as input for any trade decisions we make in the New York PM session. So when we look at the 15-minute chart, we can see during the lunch it make a swing high here, like a over here, internal one swing high over here, just where I point, and if I just, and then we saw there was a retracement, like, okay, let's say this is the main price move, okay, a swing high, and let's say the price coming down over here, and the price was unable to make a, compared to this swing low, the price was unable to go down, right? Which means the price was unable to make a lower low, like, because the price stopped here and rallied up. Okay, so when I say the price stopped here, you can see this swing low is higher than this, so we call this as a higher low, right? So which and then basically what happened was there was a price swing up. We just look at those points, and then what we noticed in the New York PM session is, we noticed that it took out liquidity generated over here, because the price moved above this over here. So when that happens, it's grabbing liquidity. And during the, now when it grabbed that liquidity, what we how we look at the market was, okay, the price is coming down, and compared to this swing low, okay, the price made a significant lower low compared to this, which means overall, if you look this swing low compared to this, so it took, basically it took London liquidity here, fine, that's all good. But if you look, one could see, compared to all this price action here, one could see it's a significant price move down, right? When I say significant price move down, I'm looking at, let's say, this move compared to those moves, it is a significant. So when you see a significant price move down, and when in the daily chart, when we were at the daily, let's say in a situation, let me bring that to you quickly, the daily chart. So when we were in a situation where we said, okay, in the daily chart over here, when we said we are at, let's say, reaching these fair value gaps, order blocks, and when we said there's a slight chance of price coming down in the daily, because it cleared the relatively equal, it cleared the liquidity above the relative equal highs, etc., etc. That's, so what I talked now was about the kind of the daily bias. Okay, so don't worry if you are not very clear of that, we will make it more clear in the future videos. The purpose of you looking at this video is, if you can't understand some of the terms what we mention here, the purpose is to get the overall feeling and the overall understanding, so that when we educate, when we release more videos explaining those theories, you have seen practical examples that will help you a lot. Okay, so don't worry if it's overwhelming, but the idea is, based on ICT concepts, there is a chance of price slightly coming down, right? So because of that, and then when you look at this significant price move happening in the AM session, right? And when you see, compared to this price move down, when you see this price going up, we consider that as a retracement. That is a retracement. So when I look into that, when team at Trade Oxygen, when we look at that, what because we consider this as a significant price move down, what we did was we looked at that price leg and to see if there is any fib retracement values happening in that. When I said that, we already have a fib drawn from for this price leg, and in that fib what we draw, we already saw the price from here to here, it came, and then the price retraced up to this and it came up to equilibrium and 60 closer to 60%. But and then the price coming down. So when when we look at this, when the price came to the 650 to 62%, and when the price pushed down, and if we look at that price leg only, okay, now not this part, if we look at this price leg only, why are we looking at this price leg only? Because now we are looking into a trade idea in the New York PM session. So when we look at when we are looking at a trade idea for the New York PM session, we could look at this price leg and focus, let's say, only this price leg. When I say only, but overall picture matters. But what I'm explaining here is this, because this price leg was significant, we could look a fib retracement only for this price leg, right? I mean, not this one now, because this price leg from here to here, and that fib we already used that for the trade idea we took at New York AM session, okay? But for the trade idea of New York PM session, because this is significant, I'm repeating the same thing, we could draw a fib retracement from this top to this top, right? So if we look at that, okay, so this arrow should come down. It's okay, like, let me draw it again. Okay, basically, okay, it came down, right? Let's put it down, okay, like slightly down, right? Now if it is confusing, let me delete this. Okay, so let's put this again just to avoid any confusion for you guys. Okay, so the price significant price move, retracement, okay, and coming here, right? And then what's next? Okay, let's keep it like this, okay, and then to show you how we decide the next move. Okay, right? Then if we remove this fib, because it's too much of drawings otherwise, if we remove that fib, and if we go to the other fib we draw for this price leg, now you can see we draw the fib for this price leg. Okay, so if you look at that, so now I'm drawing, just focusing only on that part, so that it makes it easy for you to understand what we are talking. So this is that price leg happened in the New York AM session. Now when you focus only on that price leg, if we draw the fib retracement fib from this price leg move from here to here, you could see that when it came to the New York PM session, evening session, you can see now the price is very close to the equilibrium, 50%. It didn't touch, but it's close. Okay, you could draw the fib, like, let's say, into the bodies, and then you could, let's see, if you draw the fib, let's say, to the bodies slightly, bringing down to the body, you can see it's almost touching the equilibrium. Now what that means is, now we have to look at the overall context. Okay, so the question is, okay, the question you will ask from us is, okay, as this is not investment advice, but as education purpose, if you ask, okay, am I going to take a bullish entry here, like am I going to buy or sell here? Now for us to understand that, what we could do is look at some other significant facts. Okay, because now this is a post market analysis, and on hindsight now we can see, of course, the price came down, so that means the answer is, okay, we should have, okay, we should have sold here, right? But the question is, we can see it happen, but before it happened, how did we at Team Trader Oxygen made the decision of selling here? Because we took a sell entry here, but how did we come into that conclusion, right? For that, what we did was we looked at some significant other factors, which I will explain to you now. Okay, so this is the 1 hour chart again. Now I want you all to focus from this, starting from this point up to what happened. Now, so what is this? This is this blue color line. What you see here is the beginning of this is the Sunday opening price for the week. Okay, now what we are explaining here is why did we take a sell entry in the New York PM session. Okay, now this New York PM session was the last day of the week, Friday, right? So on Friday, in the last trading session, the New York PM session, why did we short? Why did we sell? The reason is when we look at the starting price of the week on Monday, let's say this is the Monday, basically the Sunday price starting, you can see during the week what happened was the price moved up. So price has moved a long way from the starting price up. Now that price leg move from Monday to Thursday, you can see, right? That price move has been balanced. What we mean is from here after that, on Thursday, we can see the price came down. So for us at Team Trader Oxygen, for us what this means is the Friday, end of the week, what price is trying to do is price is trying to come back to the weekly range, because the weekly price started here and it traveled here. So what's happening on Thursday is when usually, but remember, past conditions does not okay, past conditions is not assurance that it will happen in future, but what we are telling is there is a probability that when you see a price leg a price moving away from the Sunday opening during the week, there is a chance that the price come back to the weekly range. Why? Because the price has gained now a lot. So when the price gain, it has to balance. So it has to come back to the midpoint, let's say, of the weekly range, or come towards the weekly range. But having said that, it's not happening always. The price could just come and go back and finish even further away. That could happen. Price is not 100% predictable. But what we are trying to do is, as we have educated you in this channel, is we are going to take a educated judgment based on probabilities. So when the probability here is when the price stretch like this, there's a chance that the price could come back to the weekly range, which means that is a confluence for us. That is another fact for us to make a decision. When I say another fact, that means it is a supporting reason for us to say, okay, in the last trading session of the week, the price could come down and finish down, right? Which is what happened. Why? So that the price want to balance and come back to the weekly range. So that was a significant fact for us at Team Trade Oxygen to take a sell entry in the last session of the week in the New York PM session. Right? Hope that is clear to you. Right? Once again, subscribe and click the bell icon so that when we release more educational videos, we will explain all this in further details for you guys. Okay, so with that idea, now we are back in the 15-minute. So that idea what I explained about the weekly range gave us an idea, hint, that when in the New York PM session, the last session of the week, when it sweep the liquidity over here, when I say sweep the liquidity, what I say is there's a swing high here. And when the New York PM session, when the price moves above this swing high here, that is what it means for us is the price is grabbing the buy side liquidity here. Why is the price grabbing the buy side liquidity? Because there's a huge price, like significant price move down, number one. So I'm now giving you the facts for why we took the bearish entry. Number one, price moving down, significantly moving down. Number two, what I explained, the weekly range. So there's a chance of price going and finishing going down towards the weekly range, which is what happened, right? But and then that is number two, the weekly range. Number three, the price grabbing buy side liquidity. Why? Because of the swing high here, some traders, uninformed traders, when they sell here, they put their stop loss above this. So when they uninformed traders, I'm not talking about smart money, I'm talking about uninformed, let's say less educated, less uninformed, let's put it that way. Uninformed traders, when they sell thinking the market is going down, they put their stop loss here. So when they sell, their stop loss is a buy order. So there's buy orders here. That is what we call as buy side liquidity. When you got the buy side liquidity pool over here, because you could see relatively equal highs compared to this swing high and this swing high. In the 15-minute, when you see relatively equal highs, that is plenty of buy side liquidity, buy entries. What does that mean for smart money? For smart money, when the algorithm, let's say when the algorithm want to take the price down to finish the week, and when the smart money understand that, okay, there's a chance of price finishing down, when the smart money, when I say smart money, I'm referring to the banks and large institutions. When the smart money see buy side liquidity, that is a place where they can sell, because they need to sell in large quantities. For them to sell in large quantities, there should be a other opposite party in a trade. If someone is selling, someone should buy, right? So for in smart money to sell, they need a large pool of buy entry, so they can sell for that. That is what we call as the grabbing of buy side liquidity, or liquidity run, or sweeping the liquidity. So when the smart money sell, right, they will leave some footprints. For us to see that footprints, what we had to do was we had to go into lower level charts. So with that idea, we went into the 5 minutes chart. Okay, so now we are in the 5 minutes chart, and this is where in the New York pink color box is a New York PM session starting from 1:30 p.m. So we can see what we do in based on ICT trading concepts. What we do is when the price sweep liquidity, relatively equal highs liquidity, see, it's a liquidity grab. When the price sweeps the liquidity, right, what we do is, with all the other confluences, but keep in mind, you can't take this decision isolatedly, meaning based only on one fact. For us to take this trade, we wanted the previous facts, which I explained you earlier, right? The significant price move down, number one, weekly range coming down, like the end of the week, price coming down back to the weekly range. Number three, sweeping of liquidity. We need all that to happen. Now, when that happens, based on ICT concepts, this liquidity sweep is what we look is before 1:30, we look any of the swing highs, which is this relatively equal. So before 1:30, if there are any swing highs being formed, and after 1:30, right, over here, after 1:30, if the price sweeps that liquidity, and with all the other bearish confluences, bearish means short confluences, what I explained earlier, that is only where we come into a probabilistic decision telling, okay, there is a probability that if we sell here, the price to go down. So this is a game of probabilities. So we have to increase our probability. We have to increase the points in our favor, right? So we see a couple of points, right? And it's end of the week, as I said. So what that means for us is, when we see now the price, okay, this is the interesting part now. So from that 50% equilibrium, almost touching end of the week, there's a need for the algorithm, as we can see here in the price action footprint. There's a need for the algorithm to come and finish more closer to the weekly range, the blue color line. What that means us is, interesting point is, then when we see this price move down, we see a wick being formed here, meaning the price is pushing down, and we can see, okay, the price has moved up in this wick over here. See this little bit wick, and the price coming down, and the bearish, see how many bearish candles, the black ones, and see the significant displacement. See, that was the decision making point. The significant displacement breaking the laws. Okay, so that means when this price may move break the law with in this scenario, in this narrative, in this context, that means this swing high grab liquidity and push the price down heavily, and breaking this swing low is this becomes a strong price point. This becomes a strong bearish price point. Why? Smart money grabbing liquidity and smart money pushing, and so this becomes a strong sell point, as I said. So what happened? So in that context, this swing low becomes a weak low. Why? Because we were able to break it. And in that context, this swing high becomes a strong high. So we formed a strong high and a weak low and a huge displacement. What that means for us is smart money selling to finish the week. We need to have that idea. We need to have that narrative. Why? Because if we are to sell, which is, if I show you the sell entry we took, the short position, right? We took over here, if I put it back, the short position, let me bring it back. So this is, so this is the short entry we placed. When we see that huge like displacement and a weekly low being formed and a weak low being formed, weak, and a strong high being formed, and the displacement. So this means smart money and the algorithm want to finish the week more towards the middle range of the more towards the range of the week. That means the blue color line. That was a turning point for us to make the decision. And then this displacement, and then in the displacement you can see it made price imbalance, a fair value gap, right? And then you can see it also made an order block here, because this price, the green candles are order block, and this the fair value gap. Again, if you are not sure what is the order block, fair value gap, subscribe. We will be releasing more educational videos explaining what are those. So then the idea is, if smart money sell, if there's a imbalance, the price should respect the imbalance, right? And then the price should respect the order block. But for us to make the entry point, we had because there's the price move is significant, but still the range is less. So we have to go into a lower level to refine the entry. But we have all the facts now to see if this happened. Now, as it happened, then for us the idea is, if the price come retrace into the order block and fair value gap, then we can take a trade. That is what happened, right? If I put the arrow here. But for us to confirm this, to take the entry, we have to go to the low level charts, which is what we did at Team Trade Oxygen. We now went to the low level charts. And another point is, we are still in the 5-minute chart. We can see one price imbalance, fair value gap here. But if we draw the fib from here to here, like now if we consider this price leg move down from here to here, if I just draw that fib, just to conclude this, you could see this fair value gap over here is below, is at a discount level. Now if we are to sell, we have to sell at a premium level, that means above 50%. So this fair value gap, because it's in the discount level and we are now looking to sell, we don't sell in a discount, we need to sell in a premium. So we have to wait for the price to move above the 50%, which is what happened here. And then we have to see if there's any fair value gap in the premium. Okay, this is a 5-minute chart. So when you look at that, you can see there's a fair value gap forming from here to here. So if I quickly draw it, there is a fair value gap forming from here to here, right? Okay, so that fair value gap, if I draw it like this little bit, you can see this fair value gap is what we were targeting, which is at 70% fib, which is at a premium. So with that, now we got a fair value gap, right? And then we can see this is the order block, the two green candles, and there's a chance where the price can come to the midpoint of our order block. So if you look from this length, this order block, we are in the middle of that. So that is why we place our sell entry at that point. So that is the reason why we place. So we placed the sell entry as a sell limit order, and we just waited, right, to see if what market does. So what happened eventually is the market, the price came and grabbed our entry, the sell entry, and we were in the sell, and we were targeting the, at least let's say, the low of the, we were like, the original target is over here, which is 1 to 2.56. However, because these are wicks, uh, to be balanced, we placed the target over here, and you can see the price came and hit the target for a 1.1 to 1.8 entry, which is fair because we already got one entry 1 to 4 in the New York AM session as well, and that completed the trading for the week. Okay, so that was a lovely session for us and for that team trader Oxygen, right? Because all the analysis played well. So that is the end of the week. So we will be finishing the trading for the week. And one more thing is that make sure you look at the previous videos for you to get a clear idea. So with that, we will see you with another video next week with a pre-market analysis, then live trading and a post-market analysis. So see you next week Monday with the pre-market, live and post-market sessions. Stay safe until that.